Londra'dan herkese merhaba. Bu bölümde piyasalara özel bir parantez açalım. Değerli bir konuğumuz var. Timothy Ash'le birlikteyiz. Kendisi ekonomist. Tim, welcome back to our program. We seem to catch up every 2 or 3 months, and it's fair to say that the year has started at an extraordinary pace, really. Let me start broadly. What's currently at top of your radar when you look at the financial markets?
Well, I guess the question is, risk is traded very, very well, right, globally. I mean, you have these extraordinary geopolitical risks, the future of NATO, the war in Ukraine, Iran war risk. We've had this extraordinary US intervention in Venezuela. And we have concerns about the US, I guess, in terms of politics itself, the Trump presidency. And yet, Dow and S&P are kind of close to record highs. EM currencies are strong. EM credit, credit spreads are kind of close to record tights. And EM, actually, emerging markets, are doing very, very well. The dollar's weak, which is helping all that, I guess. And there's an assumption of I guess, lower US rates, which I guess is supportive. But things just feel a little bit overdone, right? And, and also we have these overinflated asset markets like gold, right? I mean, extraordinary gold prices. So, there are a lot, markets are doing well, but it just feels very uncomfortable, I think, where we are.
Do you expect a correction at this point?
Well, you would think so. Something. I think for emerging markets in particular, I think the positive factors have been, the weak dollar, right? Despite what Trump says, Trump, every meeting he has with, the Qataris or the Gulf guys, whoever it is, they're all going to put trillions of dollars into the US. And the US growth story is doing very well. But despite that, the dollar's weakening. The dollar's weakening, I think, because international investors or they don't believe that story, and they're worried about political stability in the US and policy in the US, and they're diversifying, and that's helping EM definitely.
Yeah, but a rate hike is on the table, as far as we understand from Fed. There's a split between Fed, and the rate hike is also on the table. They say so.
Yes, different views, and obviously, let's see if Kevin Marsh comes in and we have all this sort of Fed rates lower, but then balance sheet adjustment helping the long end. I don't know. We'll see.
Okay. I would like to ask your opinion about two specific issues. First of all, the Iran risk for global markets right now. Do you see a weekend risk at this point? And the second one, the Ukraine-Russia peace issue. Shall we forget about it? Because it's the fourth year and we don't still have a peace there.
Yeah, the Iran one is the one that's most pressing for the market. It looks, all the kind of news flow we're looking at, it looks like Trump is probably going to hit Iran very soon. I guess the consensus is that neither Iran nor the US want an extended conflict. It'll be contained, almost choreographed in a way. And so there'll be limited impact on global markets. Iran, as long as there isn't an existential threat to Iran, and the Trump administration is not about regime change, Iran will not hit out at Gulf states and look to close the straits, all those kind of things. That's the consensus, right? But I guess as we found out, as Putin found out with his 2-week campaign in Ukraine, to the invasion, if you go back to February 22, wars are uncertain, right? You start a war, you never quite know how it's going to end. And we don't really know. That's the assumption that Trump doesn't want to go down the regime change kind of route. But if he does, it could get kind of ugly. So I think Iran is one of the risks that maybe is underpriced at the moment by the market, right? It's easy to take the consensus view, but let's see what happens there. And then you mentioned the war in Ukraine. There's been a lot of optimism in the market about the peace process. We've had all these iterations. We had the Istanbul meetings. We had Abu Dhabi several rounds, and Geneva several rounds, and a lot of the characters are talking positively. I see zero chance of a peace in Ukraine this year. I think this process is ridiculous. It's all meant to massage Trump's ego. Clearly, Trump wants an easy win, right? His poll ratings are terrible. There's midterms coming up. A lot of the special elections in the US have not gone Trump's way. So he needs a win, and he's trying to force the Ukrainians into a really bad deal that they're never going to accept. And, I think Trump has kind of encouraged Putin to play the long war scenario, because I think, Putin thinks he can play Trump. I think Putin thinks Trump's an idiot, really, and the longer Putin holds out, the more likely Trump is to force a bad peace on Ukraine, right? So neither the Ukrainians or the Russians are interested in Trump's peace at this point in time. So the war's been extended, I think, because Trump has mismanaged the peace process.
So, Tim, we are not talking about positive things right now. We are talking about Iran risk. You are saying that I give zero chance to a peace in Ukraine this year. And you say that a correction might be near the door for the markets. So we are also talking about a global reorder and changing geopolitical and economic landscape. So in this big picture, where do you think Turkey stands? And if a correction happens in the global markets, for example, how do you think Turkey might get affected? Can you say that Turkey might decouple in a positive way somehow?
Well, I started off by saying, how EM is in a relatively good place. I mean, one of the factors that, what's interesting is that, for the first time in many years, we have relatively good policy in many emerging markets. I guess looking at the external risks, particularly from the US, it's forcing policymakers to be pretty orthodox. Don't take risks with policy. And if you look at Turkey, look, in the end, we can, and I've criticized the central bank in terms of its policy, not doing enough to counter inflation. But I guess the central bank has hiked policy rates far more than anyone expected. If you go back to 23, right? If you remember the expectations before the election with a CHP win, an opposition win, was rates wouldn't be as high as they are now, right? So we've seen a welcome return to orthodoxy from policymakers in Turkey, higher rates. We are seeing tighter fiscal. In the end, I would argue maybe not quick enough from Mehmet Şimşek for the disinflation process, but they're not taking big risks with policy at this stage, right? And that is somewhat reassuring. But Turkey needs to be very careful, right? A bad outcome in Iran would see oil prices rise very significantly. We know that would impact on the current account deficit. We know that it will obviously impact on inflation negatively as well. And in a worst case scenario, Iran could be pretty disastrous for the Kurdish peace process, refugee flows, all those kind of things. So, it needs to be, I guess in terms of policy, they need to be pretty careful at this stage. And so far they kind of have been. But, the risks are out there. I would argue, and I have quite strongly, that, given the geopolitical risks and settings, Turkey needs to diversify away from the US. It needs to look for alternative security arrangements. It is doing that, right? Close relationships with Saudi Arabia, Gulf states. That's positive in terms of it should see investment flows to support the balance of payments and Turkey's buffers. And Turkey needs close relationships with Europe, right? And Turkey wants that, right? Turkey, in the context of the war in Ukraine, Turkey can provide a lot in terms of European security. We saw this Turkish contribution to NATO exercises in the north of Europe with Turkey's helicopter carrier participating in that one. That's good news. But the problem there is Europe. Europe seems to be racist, Turkey phobes kind of dominate, particularly in continental Europe. This is a great opportunity for Europe to pull Turkey closer, right? And unfortunately, I guess some European politicians don't really see the big picture, which is a shame.
So, in terms of foreign investor confidence, monetary policy matters. So, do you think, looking ahead to March, is a rate cut still on the table in your view, or do you expect the central bank to pause in March in terms of disinflation process?
Well, look, again, I've been pretty critical. Central Bank have done a great job relatively since mid-23. I would have thought more effort needs to be required, given that inflation is disappointed, right? And obviously, we saw quite a disappointing print in January. We saw the inflation report. Obviously, the governor was pushed quite a lot on the next rate cut. One would hope and I would say the MPC has consistently failed to come in below expectations, right? It's tended to disappoint the market in terms of its hawkishness, right? It's tended to be overly dovish, in my view, in the market's view, and so I guess you have to assume that. Obviously, there are some changes coming up with the MPC. Obviously, Jeff Darche is leaving. He's generally seen as the hawk on the MPC. Again, the good thing to do, I think, would be to pause in terms of what we saw in terms of January, in terms of the inflation print, and also the geopolitical risks, as I've mentioned with Iran. I mean, I think it would be logical not to cut rates at the next meeting. But obviously, there seems to be pressure for wherever for the central bank to continue its easing cycle. Expectations have gone from 150 cut maybe to 100. It would be good for the central bank to do something less than that, right? Mm-hmm. I mean, I think send a very strong signal to the market. At the moment, it feels a bit like the policymakers in Turkey are kind of comfortable where they are, right? I mean, growth's kind of okay. The balance, the twin deficits are moderate. The balance sheet's looking a lot stronger.
Are the markets comfortable?
Well, the question is, it's about carry versus duration in terms of bond markets and foreign investors, right? I mean, I think that the market feels very comfortable with, Şimşek and Karahan. They like the team. They view it as generally orthodox. They'll more or less do the right thing, maybe not at the pace the market wants. In terms of exchange rate policy, the market still thinks that this real appreciation policy that the central bank has is essential to disinflation. So they're happy to go long lira, and they're happy to play the carry, but they're more reluctant to go into the duration trade. And that's basically investors thinking that, yes, inflation is going to, the disinflation is going to be successful and relatively aggressive. There's mixed views there. When you see investors buying into the duration trade, you know that the central bank has the confidence of the market, and the inflow should be very, very significant. And unfortunately, we're not seeing the duration trade. We're not seeing foreign investors go all in on Turkey, I think, because while there's confidence that Şimşek and the central bank team will remain in place until elections, there's a bit of a concern there that they probably just won't do enough in terms of keeping policy rates tight enough to significantly bring inflation lower.
Timothy Ash, thanks for joining our program.
My pleasure.